Hey everybody, welcome back. We have a lot to get to, so we're going to just jump right into it. So the ES cracked today. We cracked on a macro issue. Now we're going to get to that in a moment, but it's important to understand why we cracked. We're going to be talking about the stool a lot tonight and what to be looking for tomorrow for ADP, non-farm payrolls as well. But let's get right into it. So this is a left shoulder, the head, the right shoulder, and you can see the development and you can see how this is playing out. Left shoulder, right shoulder, head, neckline. Broke the neckline. We talked about this pre-market live today, that you were unable to rally, and we did not like what we were seeing here. We did not like the fact that you were kind of getting wedged into here and you were just unable to get over, and you started to roll. You never know how these are going to play out until they play out. This one finally cracked, and you had a lot of chances here to actually short it and put some shorts on, but you just didn't know how it was going to go, and you had a lot of moving parts, but it definitely made a decision today, and we're going to talk about what to look for next for sure. But before we get into that, let's look at just the big moving pieces on what's going on. NQ sitting right on that key level. If you look at these wicks down here, we've been down here before. These kinds of patterns are pretty nasty. When you break down, try to rally back over that control bar, and you just can't. You're just not able to do it. I'm going to zoom in here and show you what I mean by this. So again, we're going to do a lot with the stool tonight, the macro, the fundamental, and the technical. For those that are new to this, these videos are all linked together based upon what happens. And we start with Saturday and we move forward. But down, 1, 2, 3, up is the true pattern, but down, and no matter what it is, and then you break like that. These are high probability patterns. You can look these up in any candlestick book. Falling 3, rising 3. This is about as real as you can get. And it's not perfect, no, because there's 4 in here, but same soup, reheated. You tried to get over, unable to. This bar's in control, breaks down. That's all she wrote. So now you have a new control bar, which is right here, and it's going to take you to the same level, guys. It's going to take you to 15,000. By now, everybody knows that 15,000 is the area, and you have to watch that very carefully and go from there. This is just, if you are looking at this chart, it's just starting. It's not over yet, but that doesn't mean that we're going to continue to sell off. You can sell off, and then you can bounce, and then you can sell off again. Let's look at this on the hourly and drill into this a little bit. Now, here's your level. And you didn't break 14.6. You broke 14.8. 14.8 is toast. And that was one of the areas that we were watching really closely. And this completely and utterly broke down today. And you know why it broke down, the jobs number. And we're going to go through that in a minute here. But that level's toast. So when you bounce off here, you're going to want to watch this. Now today, we were watching this really closely into the end of the day. And I think that this is a really important distinction. And I would pay attention to this. You held this level. Rallies, undercuts, makes a higher high. I don't know that it's going to continue to do that, and you might have a new minor support level right in here at that 14,713. I don't know yet. We'll find out tomorrow for sure, but you flipped it, came back, tried to retest it, and you're there right now at the time of filming this. So that's not ideal, but there we are sitting. 15 is obviously the area now. The rally here, we know exactly why we rejected up here. We know why this bar is there. And I'm going to show you some live trading today in a moment on how we knew that this was the area that we had to watch. We didn't know what was going to happen, but we knew what we had to watch and when we had to watch it. But there's some moving parts here that I did not go over yesterday, and I appreciate all the comments about just keeping this informal and just getting to the meat of it. So I can cover way more material. So I appreciate those comments instead of me spending time just editing videos. And you can see these levels right up here, right? And where you could be heading to. And you get this little demarcation line up here, like, are we going to hold here? Are we not? And we're just not sure yet, but we can see the tear. We went over on Saturday why we tore from this period on, and this is when Japan said, by the way, we might raise rates. Well, since then, you've just been on a tear on the US dollar, and it's just been an absolute tear. Well, yesterday, they come out and say, oh, by the way, we're really concerned about what's going on with the dollar. Bank of Japan does. Well, you're throwing gasoline on a fire. Do you think the trader said, hey, we should really back off? We really don't want Japan to have a problem? Or do you think they said, hey, we could really squeeze Japan here? Let's sell the long end of the market and buy dollars. And maybe that's what's going on here. And I think we have to think about that. Like, I'm absolutely shocked that he would even come out and make a statement like that, but they did. So you can see how you're playing out here. I think 5.25, 528 is just a layup at this point, guys. And what that does to the market as a whole, I'm not really sure, but I don't see how you're not getting up to that level and getting a retest at this point. And that means more pain for the consumer, harder to buy houses, and that's why you're seeing consumer discretionary taking on the chin today. And those names are getting absolutely hammered. We're going to go through a bunch of those names right here. But you're also seeing other sectors that were beaten down. You're starting to see those start to bounce a little bit, and we're going to talk about those as well. It's also not great for the XLRE names, but some of those names look pretty strong still, quite frankly. But you start looking here at the 10-year, there's no way you're not going to get over this. Now, this presented all kinds of opportunities today to short. One of the names we shorted right into this was Netflix. It was absolutely a perfect trade to do this. I mean, it just was absolutely perfect when they came out and made their announcement on what they're going to do with rates. But also, we knew what to look for today. We knew what we had to wait for. So I want to be really clear about this. Anybody that is looking at today and saying that what happened today was solely a technical move is equating correlation to causation. And you need to be really careful of that. And I want to get into this because it's a really important distinction. We're going to break out the stool since someone was kind enough to make us the stool. I guess they got sick of my fancy drawings. Let's really blow that up here. Now, the purpose of me showing you this is so you can understand what really happened. The macro took over today. It was all macro. It had nothing to do with the fundamental side of the market. It was all macro and what's going to happen. And it was all based upon the JOLTS number coming in 1 million higher than expected, meaning you have an overheated economy still, the chance of a rate hike is greater, higher for longer, rates spike, the dollar goes up, equities drop because the consumer gets squeezed. We're a consumer economy. What triggered us was the 4,300 level. That takes you technically. But when did this happen? It happened at 10 o'clock on a macro reason. So if someone is out there saying, well, this happened because of this chart, no. This chart was defined by this event. There's a huge distinction there, okay? Correlation is not causation. This was the cause, not the chart. When you understand those differences, you understand what the trade was. They were laughing at me today because when I was doing the live call, really important distinction. You might want to listen to that again. When I was doing the live trading, I'm going to show you a clip of it in a second here. I actually said, doesn't matter, short anything. It's one big trade. And they were laughing because I was just saying it really doesn't matter. Pick a tech stock and short it because they're all going to come in because the macro game has changed. So watch this quick clip. I'm going to show you a Netflix short, and then I'm going to show you what we did with the ES and how we bought puts and did very well, and then we'll come right back to it. To me, that's an outright short, to be candid, to raise price after strike. Yeah, good luck with that. People are already looking at it, wondering what they're paying for. You got to work with me. So watch that level right there. If you start cracking here, it's probably toast. Yeah. All right. So whatever just came out, it's not good. The market's taking a hit. Let me just see here. I don't think raising prices is going to work for them that much anymore, guys. Let's get to the number. Oh, way over. Way over. Awful number. Awful number. Short NVDA. You can short whatever you want. I'm short Netflix right here. I'm going to use this high as a stop. It's going to cost me $2. I'm short Netflix right here. Just pick something. Doesn't matter anymore. Awful number. You're not going to hold. I can't see this holding now. All they did was set people up. They did. See if you hold, but that's an awful number, guys. Using this as my stop will cost me $2. And I could be wrong here, but I'm staying short. There's I could make $10 here. So I want to stay short this for now. Let's go through these names, drip, see what happens here. See how that goes. Go to that 1 minute, go back to it. See how that goes there. That's me really impressed. That's an awful pattern, guys. If you break here, you're toast. I think you're toast. I mean, you can do a bunch of stuff here. Let's go take a look, see what's going on. Go out there and buy it open. Just watch what's going on here. I mean, you can even buy puts on the ES here. I bought a bunch of puts. I bought a bunch of 425s. I'm going to hold them for a second here and just watch. But I bought a bunch of the 425s right there. You just pick something and short it. Doesn't really matter. It's not really going to matter here. And you can just buy SQQ. And then if you close over that high, if you get over this, just close it. But I don't know, man. I'd be real careful here trying to pick this bottom right now. I would stay out of the way. I really would. That's a really, really bad number. Let's see how this goes. But if you get back over 4,300 on that, I'd be really impressed. But that's a really bad number. I'm up $1.50 on that Netflix. I'm going to pull something out. If you get through 4,300, go from there. 425s are 140. I paid 140 for them. I'm just watching the world go by right now, guys. I'm not doing anything with them. They're going to bounce all over the place, but I want to see what happens. Yeah. I mean, I got to tell you guys, raising prices and telling people you're going to raise prices when the writer's strike comes back, that's not ideal. I mean, I get how you spiked on that, but up 2.5, going to pull more out. Silly. We're going to raise prices. I already pulled out at 2.5. Stop's $2 now. Gain of $2 would be my stop. Watching the S&P, see how ugly this gets. NQ, probably going to add to this. ES in a minute, up $4 on Netflix. Going to pull something out. Too many other names here now. All right. Nope, I'm out. Up 4. I'm not going to go through this and retest up here. I'm out of the trade. I made $4. Next. Thank you. And that can keep going lower, guys. You can absolutely get down to here. I'm just not going to play that game right now. I'd rather just lock that in. All right, so you're getting a bounce here. Let's see what happens. Buy. All right, so I paid 140 for these. Just watch this and see what happened. 170. All right, so I'm going to pull something out of those two. I'm up 30 cents on those options. I'm going to pull something out. Again, this can go a lot lower, guys. You can absolutely get back to that breakout bar. But I just didn't like how slow that bar got compared to this one. I want to get out while the getting's good because you're going to bounce all around. On those options, again, I pulled something out of when I was up 30 cents. Now I'm leaving the rest on the 425s. I paid 140. And I'll just leave the rest on and go from there. If I break even on the rest, I could really care less. Into this, easy money was made. Anything else? Again, I'm using $2 as the stop on the rest of those puts. I'll go from there. This was last month's. This is the estimate, and this is where you came in. That shows that the economy is strong, and it shows an overheated job market, right? There's no chance that you're going to cut rates. Bottom line is that number is really bad for the market. I'll leave it at that. Because you're higher, right? So show a good, strong economy from there. Very little to do now, guys. Just if you have trades on, you let them work. Okay, so now you can see what we did, how we shorted Netflix. And I think this is a really important distinction here. And I want to get into this. So my shorting of this was predicated upon their news. While this trade works so well, this trade works so well because of what? This trade works so well because I put myself in a position when I knew those numbers were going to come out. So I had extra as a kicker. Now, a couple things here. I thought that this could ride all the way down. I didn't stay in the trade. The first sign in here on a 1-minute chart that I had an issue, I just closed it. There were too many other shorts that were working out there. There were too many things working. I was up. I didn't know if this news was going to kick in or not. So I'm not waiting for these retests to see how I do. I'm just getting out of the way. I was live for an hour and a half. During that live call, I was telling people, hey, this can absolutely go lower. I'm just not staying with it. I had a really big ES short on, and I had a bunch of puts on the index. It didn't really matter today what you did or what you shorted. There are sectors that are weaker than others. We're going to address that. But we had an ES short today from over here, and you don't have to be first. You have to be right. And you saw that from the live trading. I didn't need to hop in. I needed to make sure that it was going to work. I needed to make sure that I was right. And when I saw this pattern right here, as you just saw in that live trading video, that was it. That's all I needed. Here's the break. I'm trying to hold. The break fails. That's it. Here's your stop, and you're in. You know, those calls that we bought, or those puts that we bought, we paid $1.40. At one point, we were scaling at a sum around $4. So I don't need to be in everything. I need to be focused. And that's one thing that I think a lot of people lose. So please remember that now. That's all great. What do you do with all this information for tomorrow? You have non-farm payrolls tomorrow from ADP. ADP is small companies. If you're seeing jobs spike like that, ADP non-farm payrolls is probably going to come in higher. That's where my head is. Doesn't mean I'm right. That's where my head is. So what does that mean for you? Well, it means a couple things. Number one, we already know this, right? We already know where we're at. We already know the 55's pointing down, the 22's pointing down, the 12's pointing down. No one's going to ring a bell, guys. It doesn't look good, right? We all know that. The 22's here. To think that you're not going to drop and test the 22 is just silly at this point. Of course you are, right? It's just a question of when. You have some other things that happened tonight that we should probably talk about. So first time in the history of the country, we lost a Speaker of the House to his own party. And I'm not getting into the political side of this. And let's look at the NQ. I talk about this. What I'm going to get into is the fact that I said when we had the shutdown delay that this is the worst case scenario. And this is what I said in the room, and I said it actually in Monday's video, because you're going to have so much infighting. Now, instead of getting something done, you're going to have speaker infighting, and you're going to have a government shutdown in 40 days. This increases the chance of a government shutdown. I'm not getting into the political side of this. I'm just telling you that this is something else that's going to lead to uncertainty. You can see the Nasdaq's holding in here a little bit better. For how long that does, I'm not really sure. But I do think it's important to just go through a couple things. Apple was down 78 basis points today. That's a very important distinction. If I start going through some of these other names, like Google, we really didn't fall out of bed today in Google either. I think they're looking at some of these balance sheets. And I would expect them to crush everything if this continues. But I think they're looking at balance sheets. And I think they're going after the companies that have strong balance sheets. Because if rates stay higher, if you have a lot of cash, those companies tend to fare better. And what I see playing out here is I see some divergences. And we'll get into those right now. And I think it's an important distinction. But before we do that, let's cover this. This is not going to cut it, guys. 19 on the VIX is not going to cut putting a bottom in here. I want to get rid of everything there. We need something like this. We need a 30. And remember, we'll be live tomorrow for the live stream. I will make sure that I am live before 8:30, before all the economic data. You have a ton of economic data tomorrow, an absolute ton of economic data tomorrow. Just please be aware of that. I think it's the busiest day for economic data tomorrow. So it starts with the OPEC meeting, 6 a.m., and then you have mortgage rates. These applications will be a disaster, most likely, higher for longer. And what's that going to do? That's going to hit the home builders. Home builders started to break year to date. I'll show you in a moment. Home builders started to break year to date. That makes them susceptible to what? End of year tax selling. Start building yourself a list, guys. I've been building one for weeks. Now, if you take a look at this, the big one, 3 stars. This is allinvesting.com. This is a free site. You can use it yourself. This is going to be the big one. That comes in higher. You're going to see the market sell off. It's 8:15, it's coming out. All right, 8:15, this comes out. It will move the market. Next, services PMI. We want this under 50. You want to start seeing that drop. You want to start seeing demand for that drop. But you just have a ton of data tomorrow. All it's going to take is one thing. The big one that you have to worry about, the real big one, is right here. And then 9:45, they will look at this as well. But non-farm payroll employment, they look at that to determine what non-farm payroll will be on Friday, the real one. The difference here is ADP uses only ADP data. ADP, average client, is 30. It's important to understand that there's only 30 people. Why is this important? We're going to go back to the stool macro, because that means that they're really looking at small business non-farm payroll. That's very different than looking at, let's say, Intel's payroll. As far as individual names, I'm trying not to laugh because of what I said today when I was on the live call. It really, if you're looking at tech, you short tech. Find the worst balance sheets, short those. Find the ones that look like they couldn't get through certain levels and that are breaking down. One thing you can always do is take the peak of any tech stock and drop a VWAP on it. I'm not a huge anchored VWAP guy. Time and place though. This is one of those times where I think it's extremely valuable. You want to see how you've been acting at the peak of VWAP on any tech stock that you're interested in. Bonk, bonk. See it? It's not holding. So it's giving us clear indications. When we were doing this pre-market live today, there was a guy in the room, and that's public if you want to watch it in the recorded so you can watch it later, was talking about this. And one of the things I didn't like was just the fact that you can't stay above that 55. Now, if you drill into this, and let me just do this real quick, and then you can see what I'm talking about. You're still above the 55. So you're going to want to focus on the names that are staying above the 55. If it can do that, maybe it flips. But right now, you have to start dropping these anchored VWAPs in and start looking at them. Look at NVDA, okay? Rejection of what? The 55, completely. And then on top of the Matumbo, look what you have, the peak anchored VWAP. Do you want to be buying this here? So we have what? Really good news, okay? Really good news today with another upgrade and a $700 target price. And we have a stock that's selling off and down 3%. The market's down too, I got it. But is that what we want to start looking at? Or do we want to start looking in other areas? I would suggest you start looking in some of the beaten down sectors. I'll go through it on Saturday, but I would start looking at some of the beaten down sectors and kind of go from there and see what you could find. I'm finding story stocks are working the best. One of the examples of that is this little company that we bought. We paid like $3 for it because it was trading at $270 in cash. You're now at $392. I would be looking for story stocks. Someone brought up Abercrombie and Fitch in the room today. I like this, but the way that I trade is top down. So I go index, sector, stock. If the index is down like this, then I have to go into sector. And if we look at the sectors today, obviously we don't really have a lot out there that's working, but the worst performing sector was XLY. What I would suggest that you do are a couple things. Number one, we're going to go through a couple ETFs that you could look at tomorrow. And we're also going to look at where we are right now. In other words, when I say where we are, I mean, how far down the pike are we in this movement down? I'll show you in a moment because we're pretty far down. But when you're down this far, it can get pretty vicious. So You want to look at the big names as well, but what you want to do, and do yourself a favor, you can do this on any system, it doesn't have to be this one. You want to just drop an anchored VWAP year to date. And any stock that is breaking their anchored year-to-date VWAP is now up for tax sale. Any single one of them is up for tax sale. Okay, so these are all presenting opportunities, in my opinion, for shorts when they start breaking those. Or if they start breaking the 55, they're going to be setting up for shorts as well. Okay, either one of those, you just want to start clicking through them. I have the whole XLY in here that I'm clicking through, and I would set something like this up. I would really start watching these names. I was a huge home builder fan, and I'm just telling you right now, with that data tomorrow that's going to come out, these names are all setting up. The one thing that looks beautiful as a short to me is this nail. That looked absolutely beautiful today. You were at 53, now you're at 48. It's the 3X home builder supply. This sector is actually breaking, and that looks to me like we can go a lot lower here. And so that's something that I would look at. For those that don't want to short, this is really simple. SARC, this doesn't get any clearer. Here's your cup. Here's your little handle. Someone will tell me it can't be a handle because it's not down far enough. I don't care if you call it a blueberry. I'm telling you, you tried to break out, you pulled back, and now you're breaking out again. That's it. It's really that simple, guys. Don't get caught up with names. All you have to do from these levels is just drop a demarcation line and take a look at them. But SARC, these look great. These were ones I was actually buying pre-market today. And this looks really good, like it's ready to go. Here's your little cup. Here's your handle. Here's your 55 curling up. You want to go through these, guys. You want to start looking at these bear ETFs. You really want to start drilling into them. I have a list of 18 of them that I look at all the time. We've been buying these in the community for some time. The longer, they're not really going anywhere. I mean, just to be candid, like they're bouncing around. They're not really doing much yet. But if you can get up and in them, then you're in pretty good shape. And that's what we're trying to do. But some are going to move better than others. I mean, here's the Treasury yield bear. And you can just see that's setting up to break out. Remember, any of these 3X funds, you really want to look at and consider playing. Now, why am I saying that you want to look at playing those versus me sitting here spending time going and saying, look at NVDA or look at Apple? We can go through all the names. It's not relevant. What's relevant here is that you have a major shift, and that major shift is being caused by a macro issue. You need to see how bad this macro issue is tomorrow. Remember, there is our stool, right? And you want to watch this very carefully, okay? Why am I showing you this one? 3X, any of these 3X funds, you know what they do? They settle at end of the day. That means they reset every day. Up 5%, you're up 15, resets end of day. You're actually compounding daily. That's why they always end in tears. What do I mean they always end in tears? Do you ever wind up shorting this or going long, SOSX, and then you're doing great, and then one day you just come in and it's not going so well? That's because they quantify these things or they calculate them at end of the day. So you're compounding the movement. That's why when it gets back to where it's supposed to go, it's always an issue, right? It doesn't always go back to where it once was. And they eat up the cost. But I would be going through these. I mean, TZA is breaking out. You know, if rates stay higher longer, who suffers the most? IWM, the banking stock. So you start drilling into this, it starts making a lot of sense. But I would spend some time going through the bear ETFs. That's it.